Today on the Blockchain Report, Bitcoin's holding around 111K, and it's probably because the U.S. Commerce Department says it's putting GDP on the blockchain, because apparently rigged data looks more trustworthy once you slap it on chain. Analysts claim Bitcoin can eat gold's lunch by 2030, which means $1 million Bitcoin and a lot of sad boomers polishing bullion. And over in Japan, MetaPlanet is raising nearly $1 billion, turning shareholder dilution into the world's most expensive DCA strategy. All that and more right now, let's go. Good morning, my Bitcoin believers, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco. And before we dive into today's parade of pumps, dumps, and delusional price targets, let's play a round of Spot the Bag Holder. Here's how it works. You tell everyone you're a long-term investor, but secretly you're staring at the chart like it's a pregnancy test. And while you're at it, smash that like button the way Michael Saylor smashes the buy Bitcoin button relentlessly and with absolutely zero chill. And don't forget to follow us over at RoxomTV and yours truly at Hank at RoxomTV, because even Bitcoin needs a hype man. You know what I mean?
Boy!
He does. All right, let's separate the whales from the minnows, the hodlers from the hopeless, and figure out who's riding the rocket and who's stuck holding the meme coin bag in this morning's market rundown. Let's go. Okay, it is Wednesday. The markets are moving and shaking. Let's see if anybody's candlestick making some green ones for us today, and not really. Pretty boring across the market today, but hey, sometimes boring is good. You remember those days with the huge 30 to 70% drops in Bitcoin? We were longing for these boring days like this. So let's take a look and recap this morning's movements. Right now, Bitcoin hovering right below the 112K mark. We saw us go as low as 108, 109, but it looks like that 110.5 support level that our main man, Big Beat himself, Stephen Orr, talked to us about earlier this week seems to be holding strong. So we'll see if we are ready for a big bounce back here in the near future. We'll talk about it in just a bit. Ethereum hanging tight around 4,600. XRP has surged its way back up in the last few days to over $3 a pop. Cardano up almost a half a percentage point this morning. And Dogecoin up 1%. Sitting right around that 22 cents up coin mark. In TradFi, really quick, let's see how the stonks are doing. Not a lot happening here either. The Dow Jones is sitting around 45,500. The Nasdaq's up 0.11% this morning, and the S&P is chilling. Not a lot happening at all. All right, let's go. We got a lot to do today. We're going to start with this morning's bull run. Let's hit the stinger and go to camera one. All right, well, it's time for this morning's bull run where we go over the top news stories of the morning. We got a lot to do today, so let's get into it. First up, the U.S. Commerce Department has decided it's time to make GDP sexy. Okay, Commerce Secretary Howard Lutnick announced the government will begin issuing economic statistics on the blockchain. Yeah, the same GDP that puts you to sleep in Econ 101 will now live on chain. Why? Well, because according to Lutnick, President Trump is the crypto president. The plan starts with GDP figures and could expand to other stats once the Commerce Department irons out all the details. Eventually, Lutnick says this blockchain magic will be available for the entire government. Now, a lot of this data is already public, like the census, for instance, but putting it on a blockchain gives it a tamper-proof sparkle that we're all looking for. Now, this isn't exactly groundbreaking for the U.S. In 2024, California put 42 million car titles on Avalanche because, of course, California did. Elon Musk even floated the idea of running U.S. government on chain. There it is. Yikes, scaring me, Elon. Now, this was all before his relationship with Donald Trump turned into a messy public breakup. You remember that. Now, this all comes after Trump has been repeatedly trashing the U.S. economic data and fired the Bureau of Labor Statistics commissioner after a jobs report that he didn't like. So the solution? Put it on the blockchain, because while blockchain guarantees tamper-proof storage, it doesn't guarantee the data isn't cooked before it even gets uploaded. Garbage in, garbage forever, as they say. But still, this is the federal government moving its own crown jewel numbers onto crypto rails. It's adoption, it's transparency theater, and it's one more reason Bitcoin's future keeps looking brighter than Washington's spreadsheets. All right, so joining us today for this morning's bull run, we got one of my favorite people, Piotr Bedkowski from Xapo Bank. Piotr, how are you this morning? Always great to have you on the show. Thanks for joining us.
I'm super happy to have you, for you to have me, Hank.
Yes, the pleasure is all ours. We got a lot of news to talk about today, my friend, so we're going to jump right into it. Hang tight. We're going to bring you back in just a second to chat. Sound good?
Absolutely, let's do it.
Rock and roll. Okay, so the CEO of BlackRock, you might know him as Larry Fink, the world's largest asset manager, is back at it. In a recent interview, he said Bitcoin is digital gold. And let's be clear, calling Bitcoin digital gold in 2025 is like calling Taylor Swift popular. Congrats, by the way, Taylor. We're really happy for you. We've heard it before, Larry, but hey, when the guy who runs $10 trillion in assets says it, Wall Street finally nods like it's gospel. Bitcoin is gold. That's me singing. It's not good. Now, Fink emphasized Bitcoin's legitimacy and growing recognition in the financial sector. He made it crystal clear that while Bitcoin is not a traditional currency, it has one job: to be a store of value. That's Wall Street speak for we don't understand memes, but we do understand gold bars. Now, according to Fink, Bitcoin shines brightest during economic uncertainty. Fiat currencies melt down, inflation kicks in, and suddenly everyone remembers that there are only 21 million coins to go around. He even called Bitcoin the currency of fear. Okay, which, let's be honest, makes it sound like something Batman should be hoarding in a cave. But he's not wrong. People do pile into Bitcoin when their national currency is about as stable as a Jenga tower during an earthquake. And let's not forget BlackRock's own baby, IBIT, their Bitcoin ETF. It has become one of the most popular ways for institutions to touch Bitcoin without actually having to touch it. Strong ETF inflows have been rocket fuel for Bitcoin's price this year. Earlier this month, Bitcoin hit an all-time high of 124K, driven in large part by ETF demand. Since then, Bitcoin has pulled back to around that 111, 112K mark, which for Fink is basically a buy one, get one sale. All right, we're bringing in Piotr. Piotr, Larry Fink finally admitted that Bitcoin is digital gold. Does it actually mean more when the world's biggest money manager says it, or is this Wall Street catching up to what Bitcoiners have been screaming into microphones for a decade now?
Absolutely, it's a great news. I mean, it legitimizes the whole thing. I think the connection that Larry Fink is making between Bitcoin and is gold is actually something that allowed him to grasp the value proposition of Bitcoin itself before, because from the outside, someone may look at crypto industry and look at all the scams and plethora of altcoins and all the projects, and it's sometimes also it's a technology in a search for a problem. Whereas here we have a clear confirmation that that the use case is a store of value, and this is like the manager of one of the largest holdings on the planet is telling you this, that he sees this asset class as this asset as a digital gold. So that is something that is basically legitimizing it, and making more people interested in it. And and it's we spoke about this before, but it's also broadening the adoption for institutions and for everybody else in the space to jump in and have some exposure to digital gold, the gold of 21st century, which is Bitcoin.
Yeah, I mean, when the head of the evil empire BlackRock starts calling Bitcoin digital gold, I think we can officially say Bitcoin is here and it's here to stay, despite, there's still some people out there that don't believe in it. But they'll get on board. They all do eventually. Another thing that Larry Fink said that I also thought was pretty funny was that he called Bitcoin the currency of fear. Do you think that framing is accurate, or is that just a polite way of saying fiat sucks and Bitcoin wins?
Now, so investors have always been looking for safe haven, right? The place to store their money in times of uncertainty and turbulence, and especially now, if you look at what's happening in the from the geopolitics perspective, with U.S.-China tensions, with tensions between China and U.S., Russia, Ukraine war, what happens in the Middle East, markets become very turbulent because of those news. And, we have some risks, some geopolitical risks materializing. And then when they are materializing, investors are looking for safe havens, so safe place. And traditionally, those places, those safest places were gold, and sometimes real estate, but definitely not stocks, definitely not equities. And now Bitcoin emerging as a digital gold gives investors basically a place where to park that money, especially in times of increased uncertainty and geopolitical risks that we are currently living in. And the US was all there were lots of people in US and investors that were always traditionally big fans of gold investing, and because that's something that always felt like a more tangible thing, right? That you can touch it, you can hold it yourself like a bearer asset, and it doesn't have all those risks that normally equities have. And now with Bitcoin, it's not only that, I mean, it's some people even say that, the gold is like analog Bitcoin. But Bitcoin is doesn't have all those risks that equities have. So Bitcoin is even better in that regard. So while historically we've seen, for example, every time something happens in the markets from the geopolitics perspective, Bitcoin dips a bit, then Bitcoin recovers, and it's just basically a fear and it passes, and we see like a few weeks later, Bitcoin rebounds. So I think more and more investors will be looking at not only gold but Bitcoin, especially as tensions increase and the geopolitical situation worsens.
Yeah, absolutely. I mean, people do want to be able to hold and feel things, but like I tell my crazy uncle who buries gold in his backyard, you can just put your Bitcoin on a data stick and hold that and bury that in your backyard, and it's the same thing, except you can just plug it in your computer, and then it's a lot more liquid than gold can be. So, yeah, totally agree with you there. And BlackRock's IBIT ETF, as we talked about during the story, has become an absolute monster. People are putting their money into IBIT. From your vantage point at Xapo Bank, what are the biggest downstream effects of these ETFs on Bitcoin's price action and liquidity?
Yeah, so at Xapo Bank, we've seen people asking for those Bitcoin ETFs. They also want some exposure, but obviously, majority of our customers, they prefer real things. So they don't want second best. They want the Bitcoin itself because of all the things that holding Bitcoin, all the advantages that holding Bitcoin has over having a only limited price exposure when you are holding the Bitcoin ETF. So because of when you are in the Bitcoin ETF, you only have a price exposure, but you cannot actually send it, receive it. You cannot take self-custody of it. You don't actually hold it. It's just a wrapper that gives you some exposure, but it's pretty limited. Whereas with holding Bitcoin gives you all those additional things that you can do with that, like self-custody, you can send it, receive it, obviously, and do more things with that Bitcoin than only getting a price exposure. So what we've seen from our members and from our customers, they prefer having Bitcoin over Bitcoin ETFs, although we are not, sort of downplaying the fact that there is some specific customer segments that are interested in Bitcoin ETFs. And especially in the context of, Bitcoin ETFs are the wrappers, and the ETFs themselves, they've been known in the financial markets and in traditional finance for years now. So you take those Bitcoin ETFs, you go to your bank, and they can recognize what that is, right? Whereas for Bitcoin, it still feels like this, risky crypto asset that they cannot, or they couldn't custody till now. So yeah, there are pros and cons here. But yeah, I think that the overall impact of Bitcoin ETFs is positive for the ecosystem and for the Bitcoin community as well.
Yeah, I couldn't agree more. I mean, it really kind of feels like an on-ramp to people that want to dip their toes into the orange water before really going full on in, you know. It feels like traditional finance, so they feel more comfortable investing money in it, and then once they get used to the old number go up thing that we've seen time and time again, I got to imagine more people are going to be interested in natively owning Bitcoin on their own, you know, cold storage in their own wallets rather than through an ETF. So yeah, I would have to agree with you on that one. And in the last couple of weeks, we've seen some interesting price action from Bitcoin. It hit a high of 124K. It pulled back below 110 even for a bit. But now we're sitting around that 112 level. Do you think that institutional players like BlackRock see these dips as real buying opportunities? Or do they secretly love scaring retail out of their coins? Is what we're kind of seeing right now too, is it seems to be retail kind of has the paper hands a lot of the time.
Yeah, sometimes it really happens. But if we look at the customer behavior, especially at Xapo Bank, I mean, we have lots of customers that are long-term holders. I mean, the direction is clear. Those people are buying more. They are not, selling. They are just using those dips to get cheap sats. And as a Bitcoiner, I always thought about those temporary dips as a kind of opportunities, because one could argue where we are in the cycle. I think on the Bitcoin ETF front, I think the incentives are that Bitcoin ETFs, of course, they want to grow their offering, right? So they want to have more Bitcoin under management. So obviously, if people use those dips, temporary dips, to accumulate more Bitcoin via Bitcoin ETF, that's obviously something that's desirable from a BlackRock point of view. And also from our point of view at Xapo Bank, I mean, we love seeing people increasing their balances and, getting more Bitcoin, because these are great times. I mean, when Bitcoin shoots up at some point, I think we still, I mean, there is some debate, where are we in the bull run, but I think there is still some few months maybe that we may see some upward trend. And, people will be missing out when the Bitcoin shoots up, and Bitcoin shoots up always like unexpectedly right now. No one's sort of knows when it will happen, but when it happens, it rips up 5%, 10%. And we've seen this during this cycle and before. So yeah, I would say those dips are great opportunities to accumulate more. Even still, even though we've been running in this bull run for quite a few months now. And another separate discussion is whether the 4-year cycle still holds, and did it hold previously, and was it because of Bitcoin halving cycle? Was it because macroeconomic cycle? Was it because liquidity cycle? Or was it because US presidency? No one really knows. There are conflicting and debating opinions on this. My personal opinion is that although those cycles may not be as pronounced as they used to be, right, in the past, right, where you had those like 70% drawdowns, and you have price exploding like during COVID, you still will see some patterns emerging around the 4-year mark. And so maybe they won't be as pronounced, but I think that 4-year cycle will still continue. We'll still continue to see the 4-year pattern playing, till 2030 and beyond.
Yeah, it's certainly a point that's up for debate right now. I mean, we have all this institutional money now that's in the mix. Not to mention the halving rewards are getting quite small. I think it's like almost 98% of all Bitcoin has already been mined right now. So you combine these factors and we might still see these cycles in some form, but like this current one might be a longer cycle. And I do think, at least for the whole, they're going to be a lot more muted in terms of overall volatility. And we've seen that this year specifically, as I believe the NASDAQ on the whole has been a little more volatile than Bitcoin itself over this past 8 or so months. So yeah, we'll see how that plays out. But the one thing you can't always count on with Bitcoin, it's going to do exactly what you don't expect it to do. So whenever it's down, you then see it rise out of its grave, like that famous meme of the Undertaker from WWE wrestling. So we'll see what happens here, but I think we still got some legs in this current run to go. All right, stay tuned, Piotr. We're going to read this next story. I'll bring you right back because right now I want to talk about the fight of the century. And of course, we're talking about Bitcoin versus gold. The question, will Bitcoin replace gold by 2030? Now, if it does, one Bitcoin would be worth around $1.15 million. Now, this isn't wild speculation either. This, my friends, is math. You see, gold's total value is around $20 to $22 trillion. There's about 19.91 million Bitcoin all around. Divide, and you get about 1 million to 1.1 million per Bitcoin. That's 1.15 million. That figure is what happens if Bitcoin completely takes gold's market. Now, even grabbing half of gold's market would put Bitcoin over $500,000 per coin. 10% gets you past 100K. So what makes Bitcoin the challenger here? Well, of course, it's the scarcity element of it, right? Gold is rare, but nobody actually knows how rare. We dig up about 1 to 2% more gold every single year. And if someone, invents a better shovel, that number changes. If we go on one of those asteroids that has like $4 trillion of gold and start mining it there, that number changes. Bitcoin, meanwhile, is programmed scarcity. 21 million coins, locked forever, supply cuts in half every single 4 years, and predictable, unchangeable, no surprises, right? We love that about Bitcoin. Then there's the control aspect, right? Gold sits in vaults, banks, and institutions that governments can influence. Bitcoin has no central authority, no bank, no government that can stop it. Transactions are public, they're transparent, and censorship resistant. Moving value? Try sending a fortune in gold bars across borders. It's a hassle. It's slow, expensive, and frankly, very risky. Bitcoin, though, takes minutes, an internet connection, and you're done. Authenticity? Gold requires experts, tools, and trust. Bitcoin? Every coin is verified on the blockchain. It's counterfeit proof. Now, critics love to point out Bitcoin's volatility. Historically, they're right. Gold's stability made it the safe haven king. But that is all changing. In Q1 of 2025, Bitcoin's volatility was 52% compared to gold's 15%. By August, Bitcoin's volatility dropped to 45%, while gold was at 12%. Still higher, but the narrowest gap ever. Why? Well, the big money, as we just talked about with Piotr. Institutional investors and Bitcoin ETFs entered the space in 2024, smoothing out price swings. Clearer regulation is also calming the nerves of people out there. Bitcoin is growing up. It won't be as stable as gold by 2030, but it certainly seems to be trending that way. Meanwhile, institutional adoption is exploding. BlackRock, Fidelity, and other titans brought in spot ETFs. Corporate treasuries are filling with Bitcoin. Strategy Inc. alone holds like 632,000 BTC. Public companies with Bitcoin nearly doubled in the first half of 2025. Even pension funds are in. Wisconsin, Michigan, and UK funds bought Bitcoin ETFs. Cal STRS, the third largest U.S. pension fund, now has $133 million in exposure through Strategy. But central banks, they're still hoarding gold. They bought a record 1,000 tons in 2024. A 2025 survey, in fact, found not a single central bank holds Bitcoin. 93% said they have no plans to start, citing volatility and security concerns. Younger investors, though, are all in on BTC. A DeVere Group poll found 73% of investors aged 24 to 45 would pick Bitcoin over the long haul against gold. Another 2025 poll found 16% of Gen Z and 13% of millennials save in crypto long term, compared to only 12% of boomers sticking with gold. Regulation here, though, is the big wild card. The EU is rolling out MiCA. The US and UK are inching toward clarity. Fair rules, you see, help Bitcoin grow. Bad rules, though, could slow it down. And unlike gold, Bitcoin faces digital risks. The whole quantum problem, for instance. 51% attacks and software bugs. Developers are already working on defenses, but the risks do exist. So will Bitcoin eat gold's entire market? Maybe not. Gold has a history. Bitcoin, though, has code. Gold is the legacy safe haven. Bitcoin is the digital hedge. But even a partial shift puts Bitcoin's price in 6 figures, and a full takeover puts us in 7. All right, bringing back Piotr. Piotr, Analysts say if Bitcoin eats gold's $20 to $22 trillion market cap, we're talking $1 million per coin. Do you buy that math, or is it a more of a great headline for gold versus Bitcoin in the great debate?
Yeah, so I recall there was this famous quote by JP Morgan, who said that gold is money, everything else is credit. And the reason why he said that was because, everything else except things like gold, they are scarce. We basically can produce more of and will produce more of. So let's say a silver or like any commodity, anything basically which raises in price, we'll basically make sure that we'll produce more of so that price will go down eventually, right? And gold in that regard is great because it only has this 1 or 2% inflation rate. So it's basically the supply is increasing at 1 or 2% per year because that's our mining rate, right? But as you said, if we find the unexpected reserves in South Africa or wherever of gold, all of a sudden we'll be able to mine this gold and we'll increase the stock. So that stock to flow ratio will change, right? And that basically would mean that gold would become a less scarce asset. And obviously gold was the best
Right.
idea up till 19th century. I mean, we as a humanity, we didn't have better idea of something scarce than gold. So that was the very good idea. But now if you compare this to Bitcoin, which we already know that has lower inflation rate and supply rate than gold. And not only that, but it also has fully capped, not changeable limit of on how many Bitcoins we'll ever have in circulation. Then this all of a sudden is a perfect scarcity that we haven't encountered anytime before, and that's why people don't have good intuitions in general around how Bitcoin price will behave because we never have an asset like this before, right? With a 21 million cap that cannot be changed and won't be changed, right? I remember there, if you look at the history, also like the amount of gold in circulation changed, right? At some point, there was when Columbus was discovering America and they conquered the Aztecs and all the Indians, and then they took all their gold, right? And they took that gold and they shipped it over the ocean to Europe, which led to the price increases of everything all across the board. Why? Because all of a sudden we have had those additional gold coming from America to Europe. And in the same way, as you said, like if we found the gold on asteroid or whatever, and we could mine it, we can improve that technology, we could mine it, then all of a sudden we would flood the market. The value of gold would go down. Now, having said that, if you look at the performance of the gold, since I don't know 60s it was or Nixon shock, right, in 71 when the coupling of gold happened, gold was only up and to the right. Obviously there were ups and downs along the way, but the back in 71, what was it like? Nixon was promising like $30 around that rate, like around $30 per ounce. Now gold is around 2,000 or even more than that, right? 2,400
Yeah,
per
I
ounce.
think it's
So
like I think it's like 30, 35. It's up there.
or even higher. Yeah. So even higher. So that
Yeah.
that shows you how much more US dollars, how many more US dollars are in circulation that we printed out of thin air and introduced into the circulation. And all of that excessive liquidity always ends up in the hard and the most scarce assets out there, meaning Bitcoin and real estate, right? I think one eye-opening realization was also when we looked at the S&P 500 returns, but not in USD terms, but in gold terms, denominated versus gold. And if you look at that, because conventional wisdom is like, oh, the S&P 500 moves up, right? Like 7 to 10% per year. There are obviously like some years when it crashes, but then it recovers, and basically economy is going up. And if you denominate in US dollars, then obviously you see this trend. But if you switch to gold standard and you see in gold terms, it's shocking, it's eye-opening, because you actually realize that we are on the level of a late 60s. So 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 in many cases it would be better to keep and hold gold for a long time rather than invest in stock market. Now bringing Bitcoin to this picture is like Bitcoin currently is 10%. What is it? 12% of the gold market cap. So
Yeah,
and it's
about
currently
there.
we are at around 100K, 110K, whatever. So yeah, I agree with that math. So if you assume that we have to reach the parity, then this would wind up with a price around $1 million per coin. But there is a caveat here because Bitcoin is obviously it's not as good as gold, it's 10x better than gold, or like 100x better than gold, obviously, because of those different characteristics. Because you can keep it in your brain, having brain wallet, you can keep it in your brain and move. You can move, billions of dollars of Bitcoin all over the world, like in minutes, without asking anyone. And I mean, as a comparison, you can try doing that, like taking gold bars and trying to change the country with take your gold bars and try. Let's see how that goes, right? So all of those problems with gold, the gold is cumbersome and it's costly, expensive. You need vaults and guards to help you secure it. And because of all those problems that Bitcoin doesn't have, Bitcoin is at least 10x valuable, if not way more, which means that long-term perspective is we're not talking even about like $1 million per coin. We're probably talking about 5 to 10 millions per coin, which is funny coincidence because we also, if you look at early Satoshi writings, we are recently looking at what Satoshi was writing on the early Bitcoin forums. He was already doing those calculations, and he said that if Bitcoin is as successful as he thinks could be, and if it really became part of the global financial system and it really captured that market cap, the price would be around $10 million per coin. And this is what Satoshi has written in one of the early forum posts. So you can see all those pieces. They would sort of suggest that long term play, and the direction is clear. The only thing is how fast we'll get there, right? Whether it's going to be like 10 years or maybe it's an even longer play, like 30 years. And it's going to be very bumpy road along the way, right? So we are not going to get there in the straight line. It's going to be like up and down, up and down, up and down. And I need to withstand that volatility. And, lots of people sell across along the journey, and that's fine too, right? I think the more scarce thing that Bitcoin is only our time. And, some
Yeah.
people that got in early are cashing out. That's fine. And we'll probably cash out this at some point as well.
Yeah, yeah. No, the only people talk about the volatility of Bitcoin, but it's really not the volatility of Bitcoin. It's the volatility of human nature, right? And freaking out during price swings and getting those paper hands and then selling, and that's often what causes those price swings. But really, to your point, we're at the very small tip of the iceberg. It's like you only see the little top part of the iceberg, and there's this huge behemoth beneath it, and that's really where we seem to be at with Bitcoin right now. And anyone who takes a second to do any research seems to understand that. But with that being said, we're still seeing central banks loading up on gold instead of Bitcoin. Why do you think a lot of these traditional institutions are stuck in the 20th century and aren't able to get comfortable with Bitcoin as a digital hedge yet? Is it just a fear of the unfamiliar? Is it maybe something else?
Yeah, it's something which you already mentioned. I mean, Bitcoin is still small. I mean, it's still so early. And it's funny if
Yeah.
you look at this because we're already at 100K, 110K. I mean, how can we be early? But yes, we are early. And especially for a traditional institutions, for a big established banks, um, for them, it may be a little bit too risky bet still to accumulate. I mean, if you're a central bank and to start accumulating Bitcoin instead of gold, although we've seen, some countries that are doubling into this and maybe looking how feasible that would be, etc. I would love my own country to have a look at this and start thinking about this. Obviously, I can see that central banks are obviously on the gold spree and they are buying gold and accumulating more and more gold. And guess why? Because obviously gold is money, right? That's a scarce asset that will hold its value, especially given some geopolitical tensions and turbulence in the world that may be coming. So, the gold is a safe haven. And but banks won't do the switch right away. I mean, there will be pioneers. It's a new technology. It's like trying to convince old established companies that, some new technology that is only emerging, is they are conservative by default, and that's why they are, in the same way they are saying that, nobody got fired for buying from IBM. It's like a safe bet in the corporate
Hmm.
America. So it's like, nobody, you cannot go wrong buying gold. Like if you are in charge in the central bank, you work in the central bank. Guess what? Let's buy some gold, right? It's a proven 5,000
Right.
years idea that worked. And even like look at the price performance of the gold for the last few years. I mean, it's been quite great. I mean, great performance. Gold performed well, and banks that were and countries that were stacking more gold, obviously, it was a good decision, especially in that post-COVID inflationary environment where the balance sheet of Fed increased so many times over. We printed, how much was it? Like 40% of all dollars in circulation. We printed it in 18 months or something like that. So if that happens,
I think it
such
was like
an inflationary
25, 30.
environment,
Yeah.
yeah. So if that happens, I mean,
A
you
lot.
need to have a hedge, and gold is natural hedge for that. Now Bitcoin, obviously, I love uh for some of those central banks to consider Bitcoin maybe on the side. I mean, obviously, if you look at the countries that own Bitcoin, is US and China. We've all seen Germany selling their Bitcoin, at 50K or something. But yeah, it's the strategic Bitcoin reserve. You have that one as well. Apparently, they are not buying more Bitcoin, but they are not, at least not selling, which is good. And
Right.
Yeah, I think it will take. It's not so in this cycle. It's way too early, but it will take few cycles. Maybe it's this
Yeah.
2030 or something, and I think we'll see the central banks buying Bitcoin as a part of their, maybe not like all in, but having few percent allocated to this. I can definitely see this coming.
Yeah, no, I think they'll be testing the water sooner than later. And I think that something that people are failing to take account for a lot is that, well, a couple things. One, it's that we're in the midst of what could be the greatest wealth transfer of all time, right? As our grandparents and our boomer parents start passing away, God love you, I hope you live forever. But as they do, that money is then going to be transferred to these younger generations. And as we saw in the story, younger investors overwhelmingly prefer Bitcoin over gold. And at that point, for a lot of these people, Bitcoin will have always been a thing during their time on Earth. So it's a lot less unfamiliar and it's a not new thing to you if you've always been exposed to it. So, with that being said, do you think that this generational shift all but guarantees that Bitcoin eventually will take gold's crown? Or are we maybe underestimating gold's zombie like staying power and it'll be here a lot longer than we think?
Yeah, so there is definitely an argument that uh, you know elderly people are not first to change their long-held beliefs and deep convictions, right? And if they saw the
Mm-hmm.
gold during their life, and for them Bitcoin is something new and unproven, then obviously only when the generational change will happen. So literally new people with fresh minds, maybe younger, maybe people, as you say, like digital natives that were using Bitcoin, and for them Bitcoin is no risk, and they just, like, it's obvious that they hold Bitcoin. Those people will start joining those big institutions and start reforming them from within, or start sharing new ideas, etc. So this will definitely help. Yeah, because there is an argument that some people will just will never change their beliefs, old entrenched beliefs. It's like every time a new technology of that caliber comes, whether it was light bulb or whether it was like electricity, or computers. There's always like a new generation that sort of takes this technology and brings this to the masses, because that elderly generation is basically still entrenched, and their mindset is not really ready to adopt something new. Um, Now, but Bitcoin use case as a store of value. I mean, even this store of value thing, it's such a such a tiny market cap now still, because if you compare it to all the different things that people are using to store their wealth, and it's just only this, like, okay, you have paintings, you have real estate, it's huge. I mean, real estate is totally huge. Um, you have other stuff. I mean, you have watches, like high quality watches. You have all those different things that people are buying just to keep their money, just to invest into
Yeah.
something so that it's not sitting on my checking account with 0.2% interest, whereas
Hmm.
price of my groceries is doubling every 2 years or something. So people see
Yeah.
that and they are just looking for anything that would hold on its value. So if people
Yeah.
make a switch, a mental like change, or you can see those people like they are living from rentals and they're buying more and more real estate, like whether it's apartments or next houses, like there's this person is buying yet another house because they just need to park the cash somewhere, and they see lots of hassle with doing that, and then they compare it with Bitcoin, and then they make a switch, and then they cash in and move to Bitcoin. This is the end game because you don't need real estate. You don't need expensive painting. You don't need expensive car, like whatever. You don't need anything because Bitcoin solves this fully. And when Bitcoin is captured, this use case fully, that price is way, way, way higher than it's currently. And so one could say we are at 1%, 2% maybe of the total potential addressable market, if people start
Hmm.
using Bitcoin for the sort of value fully. Um,
Yeah. Yeah, and you're right. I mean, literally, especially in today's global economy where we have access to literally everything on the planet thanks to the internet, people are looking to put their money anywhere else but fiat. For instance, I just saw a story about, Kevin O'Leary, Mr. Wonderful from Shark Tank, co-owns a Kobe Bryant Michael Jordan card that's valued at around $13 million. And he was like, yeah, basketball cards are an asset class of their own. So people, now that we have so many, there's 8 billion people in the world, somebody somewhere wants or puts value on so many different things, when the truth of the matter is Bitcoin is meant to hold value. This is what it was kind of built for, right? Was to hold value so I don't have to put my money in shoes or expensive watches or basketball cards. I could, but why wouldn't I just do it in the thing that's incredibly easy to transfer? I can self-custody myself, and over its entire time period has only gone up and to the right if you scale back. So yeah, to your point, it's a new era of the world that we're ushering into, and old guard is always going to be reluctant to change from what they know. Gold always worked for me and it always will work for me. And they might be right, but it looks like something has come along that is going to work a little better, and it takes time to make that adjustments, like you said. Hang tight there, Piotr. We got one more story. I'm going to get right back to you because right now I want to talk about some of the analysts over at Bernstein. They think Bitcoin could break its own rules. What do I mean by that? Well, historically, Bitcoin follows a 4-year cycle tied to the halvings. There's a breakout, a bunch of hype, a correction, and then an accumulation phase. That pattern would point to a peak later this year or early next year. But Bernstein's team, led by Gautam Chagani, is betting this cycle will stretch until 2026 or even 2027. They point out that Bitcoin already hit an all-time high of 124K on August 14th. They see the price climbing to 200,000 within the next 6 to 12 months. Now, their reasoning behind this is, well, institutional adoption is kind of changing everything. ETFs launched last year, regulatory support is finally lining up, and the Trump administration is aggressively pro-crypto. This year alone, the U.S. passed the Genius Act, its first federal stablecoin law. The SEC rolled out new policies under Chair Paul Atkins, and Trump signed an executive order to establish a federal Bitcoin reserve. Bernstein calls this mission critical mode to make the US the crypto capital of the world. But not everyone agrees. Martin Lineweber from Market Vector says assuming a longer cycle is a little too risky. He sees Bitcoin peaking at 140 to 150K later this year before retracing. Alexander Bloom from 2 Prime says Bitcoin is caught between old and new dynamics. Institutional money and ETFs have reshaped the market, but greed and fear still drive behavior. Lineweber adds that halvings matter less now than they did before. Instead, Bitcoin cycles may follow macro liquidity. When debt refinancing is tight, investors tend to dump risk assets. When the Fed eases, capital flows back, and then Bitcoin tends to rally. Right now, traders are betting on a 73.5% chance of a Fed rate cut in September. Powell, well, he spoke at Jackson Hole last week, didn't quite confirm, he didn't deny, but it seems like the winds are tending to go in the favorable direction for us Bitcoiners out there. Meanwhile, Bitcoin is up around 111, 112K right now. That's around 20% year to date. So we're kind of left with two scenarios here. Either Bitcoin keeps up its 4-year rhythm and peaks around October or November, or the Trump era institutional wave extends the bull run into 2026 and maybe into 2027. Either way, every path points higher before it points a little lower. All right, we're talking to Piotr again. Piotr, Bernstein thinks this bull run could stretch into 2027, breaking Bitcoin's famous 4-year cycle. Do you think Bitcoin is finally maturing past the halving rhythm? Or is this analyst hopium in a new wrapper? What do you think?
I think 4-year cycles, we still need to know what was that caused the 4-year cycles in the first place. Because I think there is still a debate around, was it because of the halving is every 4 years, or was it because US presidency is every 4 years? Or maybe was it because the financing macro cycle also related to the US presidency and how the money is being spent is also every 4 years, like the way we set up the budgets, or was it something else at the play? I think the main assumption was that you have the cycles because every 4 years the supply of Bitcoin halves and you have less and less in circulation, and less Bitcoin is being minted. Now, I think this will still hold, although it will be less pronounced than it used to be in the past. Now, in the past, you didn't have Bitcoin ETFs, you didn't have institutional exposure, you didn't have institutional adoption, you didn't have strategic Bitcoin reserve. You didn't have that amount of attention around Bitcoin. Bitcoin is something known to a very limited amount of people, and it was something that, Bitcoin OGs and crypto cypherpunks and people in the crypto industry knew about, but it wasn't widely adopted. Now, as more and more people are going into the ecosystem, and you can actually buy Bitcoin via the ETF from your brokerage account, I mean, this changes the game because so many different people or pools of capital that couldn't before invest in Bitcoin now can with few clicks. And this basically, the fact that, Bitcoin ETF, they have so many Bitcoins already that you have the companies like MicroStrategy, with 600,000 Bitcoins on their balance sheet, all these things make the, Bitcoin ecosystem mature in a way that it's unlikely that we will see like 70%, 80% drawdowns anytime soon. I think what we will see, it will still see 40, maybe 50% drawdowns. I think that's healthy, especially when the hype is there. But yeah, it will be less pronounced and maybe a little bit more muted than it used to be in the previous cycles. But still, you should see the rhythm of the 4-year cadence, because after all, this is also related to how the miners are earning their fees, right? And how much they are earning and how much the price will need to catch up for the mining to be profitable. And yeah, so I think the cycles will be still there. The crypto winter at some point will come. There is a discussion between, whether it's next year or maybe 2027. If someone says it's 2027, maybe they are a bit disappointed by the performance right now, because maybe they thought that we would be way higher by now than where we are. But this cycle is different also. It feels a little bit different from other perspective as well, because, for example, the retail demand doesn't seem to be there. I mean, it's still like it seems like we entered the institutional adoption. That's fine. But if you look, for example, at retail interest, and something that we saw during the previous cycles, the explosion of Google searches and people interested in Bitcoin and cryptocurrencies every cycle was skyrocketing every time. Whereas this time we don't see this. And so So yeah, there is a very interesting debate where we are in the cycle. Is it rather early or is it rather late? And my personal opinion
Yeah.
is that even though like that cycles may be a little bit less pronounced, I think in the long term, if you zoom out, then the direction is clear. And this is also something that we've been telling our customers at Xapo Bank forever. I mean, if you're considering investment in Bitcoin, you would need to consider at least this 4 year window and
Hmm.
think about this in the mid to long term perspective, not as a short term trading opportunity that I'll buy it this month and flip it and sell it 2 months later, because you may get it right, or you may not get it right, and that will be bad outcome for you. You may lose money. So yeah, I would say zoom out and keep the focus on the long term.
Yeah, I think you're right. I think we're still going to see the cycles, but they're going to be muted. But I think a big part of that, right, is due to the fact that retail money often seems to chase after those high alpha plays. Those degens like myself would ape in, right, expecting this parabolic run and getting these 10x gains or what have you. But I think we're going to see that be a thing of the past, because with these more muted fluctuations, I think the retail interest isn't there the same way than it was previously, except for like they're aping into ETFs like IBIT and stuff. But yeah, no, I would agree with you here. All right, we got a wrap here, Piotr. Before we let you go, where can our audience find more information about you and all the amazing things that you and the gang are doing over at Xapo Bank?
Yeah, so I'm myself on Twitter under Piotr Bed, and also we're working on quite exciting stuff right now at Xapo Bank. We have recently got approval to launch a pretty exciting Bitcoin yield product, which I'm rolling out to our members as we speak, actually, and inviting early adopters and people to try it out and jump into the product. So that's pretty exciting. And so yeah, have a look at our website or reach out to me on the social media, and we can talk. I can tell you more about that if you're interested.
Amazing. Awesome. Well, we certainly appreciate you and your time and your expertise, Piotr. It's always a great time having you on the Blockchain Report, and we can't wait to have you back again very soon, my friend. I hope you have a great rest of your week.
Thanks for having me, Hank.
Pleasure is all mine. All right, we'll see you next time. All right, gang, we're going to go to a quick break, but when we're back, we're going to be joined by our crypto wunderkind, Luca Pagano, to help us read the tea leaves and tell you where Bitcoin